Hey everybody, Joshua Phillips here with Churchill Mortgage. It is September the 13th, Friday the 13th, coming to you with another Friday market update where we talk about the economy, we talk about mortgage rates and what's going on. As you know, I always like to start with a headline from CNBC. Pulled up this from today, and this really says it all about what we're looking at, which is a big Fed meeting looms in the week ahead as economic concerns percolate. So September the 18th, next Wednesday, Tuesday, Wednesday, whatever that is, we have a Fed decision where the Fed is expected to cut the Fed fund rate by 0.25 or 0.5%. That's the news we're waiting for. Now, if you've been watching this videos, you know that does not mean that, boom, instantly mortgage rates are going to be 0.25 or 0.5% better. I know I'm going to get probably flooded with calls next week about that, but those rate cuts have already been absorbed into the market, and we've already seen mortgage rates over the last couple months improve by about 0.5%. Also, it's the Fed fund rate, not mortgage rates, so it does influence mortgage rates, but it's not like they're controlling actual mortgage rates. So it's expected to be good news. What we will be listening for, though, is what Chairman Powell has to say about the future. What's going to happen in November, December, early 2025? Are there going to be more Fed cuts? Now, he's probably not going to definitively, he's never going to nail himself down and say, I'm definitely going to make these cuts. He's going to say, well, depending on economic data, as it continues to come in, I'll make certain decisions. But, what's the vibe he's going to be giving us about future Fed cuts, and that may help mortgage rates improve further, or they may stall out, depending on what he says. The other thing I want to mention in terms of upcoming events, it's the election. We have an election coming up in November, and I always want to put an asterisk there. We do not know who's going to win, and we do not know, even if we knew who's going to win, what's going to be good for real estate prices, for mortgage rates, for all of that. I remember back in 2016, I genuinely believed that, and I think a lot of people did, that if Trump became president, that would be good for mortgage rates. And you know what happened? It was terrible for mortgage rates for whatever reason. But in the days and weeks after he was elected, we saw rates shoot up. And so all that to say, we just don't know what the unintended consequences will be of the election. So just keep that in mind. Everything we say is subject to change, especially depending on that. Now, let's jump into some charts here real quick. Every week I like to look at mortgage-backed security charts. Mortgage-backed securities are where mortgage rates derive their value most specifically. What you need to know in looking at this chart, if you haven't looked at it before, very simple. Red is bad, green is good, and the higher the security price, the better mortgage rates are doing. So I wanted to pull up a one-year chart and just nerd out on this for just a second, kind of give you a quick recap. Last year, a little over a year ago, we saw mortgage rates at their worst levels, and we were seeing rates at 8% or higher, highest in probably 2 decades. And then for whatever reason, we started to see a nice bounce back. And we saw rates getting, in the 6s by January, which is amazing. But for whatever reason, earlier this year, things kind of got slowly worse, and we saw mortgage rates rise into the spring. But as we get into April, May, since May, we've really been on the improving swing. So we're now, May, June, July, August, September, 4.5 months we've seen of mortgage rates improving. As you'll notice, it's not a straight line. There's days and weeks that are bad, and we've seen mortgage rates get worse. Let's pull here into the 3-month chart. If we take a look at that real quick to look at a more recent chart, I think the main thing to keep in mind that I've been pointing out is we have stayed above the moving averages. We've got the 30-day, the 60-day, just different timeline. 25-day and 50-day, and 100 and 200-day moving averages. We have stayed above those moving averages, and that is a good indication that our trend is still in place of improving rates. Again, always keeping in mind that something can happen in the economy, in the world, that makes rates reverse course. So never make decisions about your real estate based on a gamble of what mortgage rates are going to do over the next 6 to 12 months. Anyway, good news for now. Well, listen, I'm Joshua Phillips. If you'd like to discuss your specific situation and specific interest rates for you, we're starting to get into a spot soon where I think refinancing for some folks, I send this to a lot of my past customers, will make sense. And so, happy to discuss that with you, and always happy to work on a pre-approval if you're purchasing a home and need to get pre-approved. Hey, have a great weekend, and we'll talk soon. Bye-bye.